Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be looking at my growth portfolio with M1 Finance and just looking at some of the companies I do own in this portfolio and seeing how they have fared over the past few months. There's been a lot of turmoil in the market, and some of these companies have been hit pretty hard, so I think it's pretty interesting to see where they are at right now compared to, where they were 6 months, a year ago, and what kind of average cost I do have on some of these companies. If you find value in my videos, make sure to like and subscribe so you don't miss out on future content. This is Frank Mularcik. So just taking a look at the portfolio as a whole, right now it's worth $711.47. So this is a very small portion of my overall investments. And at this point, I'm just contributing $15 per week. So if we look in the activity here, we can see every week I contribute $15. And unfortunately with M1, you have to have $25 minimum in order for them to, make those automatic buys for you. So I basically only buy anything every 2 weeks, but that's okay. I just let M1 buy it for me and do its thing, which honestly I really like to see. So every 2 weeks we make about $29 worth of purchases, $30 or so. And obviously you can see it says our net cash flow into the portfolio is about $1,000.40. But some of that is from referrals. So I think overall right now I've put about $850 of my own money into the portfolio, which is, more at this point than it's worth. So that's not a good thing, but a lot of these companies, I expected them to, fall pretty drastically if we had some sort of correction in the market. And right now, we are in a bear market. So at this point, these are the companies I own. We can kind of go through them one by one. The first one is VGT, which is a information technology ETF. And this one is sort of a core holding in the portfolio, about 17% of the portfolio. The next one up is ARK, which is even more speculative than a lot of the investments in this portfolio. Right now it's about 10% of the portfolio. And over time, I'm probably going to continue reducing this allocation to ARK. The next one here is Shopify, which is about 9% of the portfolio. I think Shopify is actually doing a 10-for-1 stock split, which is interesting, I guess, and that should be going through within the next few days. Obviously, it really doesn't affect any of the fundamentals of the business, but it is, interesting to see at least. The next one here, Amazon, about 9% of the portfolio. I'm actually surprised, how poorly performing Amazon has been for me. So my average price is around $151 compared to the current price of $116. Obviously it's been a year or two since I've been buying Amazon, so not that much time. But I'm surprised how quickly they have fallen over the past few months. And then the next one here is Google. Also has been, falling over the past few months, but my average price isn't too bad right now. It's around $2,400 compared to the current price around $2,300. So just about breaking even on this one. And the next company here is going to be PayPal. PayPal is one that has really been beaten up and I think is way oversold per se. So right now they're trading around $77, $78 per share. My average cost is around $155. So I'm down about close to 50% on this one. And I think the next company is the only company I have any gains on right now, which is Tesla, surprisingly. My average cost around $716 compared to the current price of $737. So honestly, Tesla, solid company, and I think they still have a lot of things to prove, but I think they do still have a lot of potential to transform the market. I think, the Ford F-150 Lightning is definitely shows that other companies, I think, can make good electric cars. We'll obviously have to see how well those sell. But, the Ford F-150 before, was a great car, and it was the best-selling car in America. So I'm sure the Lightning will do very well as well. And it definitely shows, I guess, that Tesla has some substantial competition. But in terms of, the cars Tesla's selling, there's not much competition with Ford yet. We'll see where that ends up. The next one here is Square, similar to PayPal in the fintech space, and this one is around $71 per share. My average price is around 134. So again, down close to 50% on this one. But again, I think this one is undervalued right now, and so I'm perfectly fine buying more at these prices and just waiting for it to recover. Next up, Jumia. This is a e-commerce play in Africa. And so there's a lot of room for growth, I think, in Africa in terms of, obviously their economy and I guess consumerism per se, in which an e-commerce company could benefit off of a lot. So that's kind of why I own that company at about 5% allocation. The next few here are also 5%, Adobe and Spotify. I group those together because they are different, I guess. And then I have Visa and MasterCard, which are obviously very similar companies, and those I'm down a little bit on, but not too much. So overall, the portfolio is down some, but really from the highs, it was around $750. Obviously, I have contributed some money since then, but I'm really not too discouraged at all by this portfolio. I'm pretty excited actually, because I know that I'm having this opportunity to buy at these great prices. And I think in the long run, again, this is a great opportunity, and hopefully I can take advantage of it sufficiently. So the other thing I do want to mention is M1 Finance. If you guys don't know how it works, basically you just set up these pies and you set up each company or ETF at a specific allocation percentage. And then when you deposit money, M1 just automatically invests specific dollar amounts into each of the companies that you have in, so that each company is the certain percentage in your portfolio. So if you guys do want to get started with M1 Finance, they do have a referral program. So if you sign up with my link, you'll get $10 free once you deposit $100, and I will get $10 as well. So it's really just a win-win situation for everyone, and I think it's a great platform for people who want to be more passive with their investments and not really worry too much about the day-to-day fluctuation. So let me know what you guys have been investing in your quote-unquote growth portfolios. I would love to hear about that. Definitely a lot of red recently, but I think that a lot of these companies, this downturn is warranted, and a lot of them maybe not so much warranted, and they will be fine long term. So again, let me know what you guys think in the comments down below, and I'll see you all in the next one.